Good afternoon. I'm Anthony Starr, Senior Advisor at the Illinois Power Agency. Welcome to today's workshop on REC pricing model cost collection. Quick overview of the agenda for today's meeting is I want to talk a little bit about the purpose of this workshop, then spend some time talking a little bit about our REC pricing model and why we're seeking to improve the quality of input into that model. Then go through a straw man proposal we have for how to start collecting cost data, and then we have a number of feedback questions. This meeting is being recorded, and the recording and the slides will be posted after the meeting is completed to the IPA's website at the address listed there. You can also get to that from our website by going to Renewable Resources, and then there's a drop-down box that says Stakeholder Engagement. I do want this to be an interactive workshop. I have about 10 or 11 slides to go through sort of set the stage of what it is we're exploring in today's workshop and some of the questions we have, but I really do want to encourage people to ask questions, either clarifying questions as I'm going along, or as we get to the specific questions that we're seeking feedback on, really interested in people's thoughts and input at that point in time. So why are we holding this workshop? The reason we're holding this workshop is that for the Illinois Shines and Illinois Solar for All programs, we have a process for administratively setting REC prices for those two programs. And we have a REC pricing model that we developed going back to the start of both programs after the enactment of the Future Energy Jobs Act in 2016. We developed a model to develop what REC prices are and have continually sort of worked on how to improve and refine that model through each of the agency's biennial long-term plans. In the most recent long-term plan that was approved earlier this year, one of the issues that came up in the development of that plan and feedback from stakeholders was what cost data do we use to put into our pricing model? And that we have been relying on data from national sources, and there's interest in making sure that the data that we have is more Illinois specific. So we included in that plan a proposal to have this workshop where we would use this process to develop a way to start collecting data from participants in the program to better inform how we model REC prices going forward to make sure that they are representative of the Illinois market. We've done pieces of this previously in, I believe it was our 2022 long-term plan, making certain adjustments for labor costs in Northern Illinois. So that's something that's been baked into the pricing model. But there certainly are other ways we can continue to refine this and have better data. We do currently collect some cost data from projects when they get completed, but it's really a lump sum number that's not very granular, and the guidance given to vendors of what to put in there is pretty open-ended. So by breaking things down to more specific pieces, this is an opportunity to make sure that we have higher quality data and we can understand what is happening in the market. We have two opportunities to sort of provide feedback for the proposal that we're developing. The first is this workshop that we're holding today. The second is that we also issued a request for feedback at the end of October and requested written feedback as well. So we are, as I said, we're recording this workshop and we'll be taking notes as we go along, but if possible, written feedback is always appreciated, because that, as we sit down and really, come to our decisions of the next steps of how we go forward in implementing things, it's very helpful to have things in writing from stakeholders as well. What we are proposing is a straw man to phase in the collection of cost data, realizing the sort of new time and effort that this will create for vendors and participants in the program. Starting with a survey in January, that would be a higher level aggregated data, and then starting either June or later of next year, adding this into the Part 2 data collection process for both programs. I'll stop there for a second, see if anyone has any high-level questions. Okay, great. I'll continue then. So quick overview of our REC pricing model. The way we have been determining REC prices for the two programs has been this model that we developed going back to the beginnings of the program, where we took the CREST tool that the National Renewable Energy Lab developed and basically have added onto that a number of Illinois-specific components. First, we gather a lot of different input assumptions for that model based on stakeholder feedback during the development of the original plan, and since then, data from the program itself to get a sense of certain things like DC-AC ratios and capacity factors, data, and then also data from NREL benchmark reports. We also then look at the value of net metering credits, basically the revenue a project would generate, and then we develop the REC prices by taking the net present value of what the CREST model generates in terms of the cash flow that's needed to support the project, then the net present value of net metering revenue, taking the difference and dividing that up by a number of RECs to come up with a modeled price per REC. And we break those out by different program categories, each program group, as well as different size bins, so that as project sizes get bigger, the REC prices generally go lower, because what we've seen in data, national data, is that there's economies of scale as projects get bigger. If you want to dive deep into the REC pricing model, Appendix D and Appendix E of our long-term plan, one of those is a narrative description of how the model works, and the other is an actual spreadsheet itself where you can go in there. Our goal is to have this be transparent. You can go into the REC pricing model and try changing values and rerunning the model to see how it changes REC prices. So we really developed this to be as transparent and open a model as possible. So this is just a quick example of something from the CREST model. I think it's kind of key for what we're getting at here, which is the CREST model is a Excel-based spreadsheet with many, many tabs that do all sorts of very cool and complicated calculations. But the core of it is a set of inputs that you can put into the CREST model that it then uses to generate the cash flow and revenue requirements. In particular, when it comes to understanding what are the costs associated with developing a project, these four numbers in it are really important. That ultimately we have to reduce the, okay, someone said that this is hard to see. Is everyone seeing my screen in presentation mode?
I'm seeing it.
Yes.
Okay. This is a tab from the spreadsheet again, and so you can go in there, and again, we'll have these slides available. This is not meant to sort of focus specifically on these numbers, but what I would want to illustrate is the fact that the CREST model has a number of places where there are inputs that we can populate to generate the REC prices. So when it comes to the costs associated with the development of a project, these four numbers are critical. We will talk about some of the other numbers a little bit later as well. But ultimately, we have to reduce things down to a number in cost per kWDC for generation equipment, for balance of plant, for interconnection costs, and for development costs and fees. So one of the questions I'll be getting to in a few minutes is what level of granularity we want to be able to build up to these numbers. One challenge we've had to date is that we have used data from the NREL benchmark study that comes out once a year. The 2024 edition has not yet been released. I actually sent NREL an email yesterday to ask when it's coming out. Hopefully it will be soon. It typically comes out sometimes in September, but some years it has been as late as some point in November. So I'm expecting we'll see it soon. The NREL data that we've used to date to populate the REC pricing model is more granular than what you see in the CREST model, in that they break things down into categories. And I'll have a subsequent slide that will show more details of these. But we take the data from NREL and we group these together to take this level of data to then have the cost inputs into the CREST model. And one of the things we're interested in is what, from the point of view of the market, would be the most efficient way to provide data to us that will be useful and that we can analyze, understand differences and trends that we might be seeing. So our straw man approach is to do this in two phases. One would be to start with a survey to be conducted in January, where we would ask vendors to provide us data about projects that they completed during calendar year 2024, and then some forecasts for what they're seeing for calendar year 2025, and to only provide aggregated data. So rather than for each project you may have completed, its exact cost, give us aggregated data by category and size range for what you did in 2024. Because what we will be doing for setting rec prices for the 2025, 2026 program year will be to use a mixture of this data and the NREL data to set those prices. And then the goal is over time to phase out the NREL data and only rely on Illinois specific data. So there will be a bit of mixing and matching for next year. So asking only for aggregated data, that way this will be a little bit easier for vendors to not have to go back to every single project. We also have some interest in some financial assumptions that are not data that we can get from NREL, some of these are things that we set back in 2017 and are due for sort of refreshing and making sure that the assumptions we are using are still reflective of the market. So we would use the survey data and the NREL data in combination to set the rec prices for the next program year. We would be releasing those draft prices in mid-February, have a comment period, and then finalize the prices with the goal of having that done by the end of March, so that vendors and program participants would have time to prepare for those prices for the next program year that starts in June. What we would then do is phase in collecting this data as part of the Part 2 application, the part of the program, both programs, when projects are completed, so therefore you would have actual cost data. So our thought would be, we're working with our program administrators to potentially have these fields available as optional fields starting in June, and then the fall of 2025, switch over to those being required fields for the Part 2 application. The reason we sort of extended this phase-in period of time is to give approved vendors and designees time that they need to change internal processes to make sure that they have the data that would be required in those fields. And we would use that data starting in the 2026-2027 program year. In both cases, we obviously will allow approved vendors, designees to request confidential treatment of the data, realizing that it can be very commercially sensitive. Let me stop there for a second. Actually, let me go to these questions. I guess this is sort of a core set of questions I want to start and open up the floor. My first set of questions are about this as an approach for phasing in the collecting of cost data, whether this will give us the right sort of data, are the timeframes we're describing reasonable, and are there any other considerations people would want to bring up at this point in time? Okay, Kevin, I see you have your hand raised.
Yeah, hey Anthony, can you hear me okay?
Yeah.
Great, thank you. I might have a kind of a weak connection where I'm at. To clarify, like, is the agency like set on this cadence and this structure where you'll be collecting information at Part 2, or are you flexible to collecting it at some other interval, I guess?
So one potential challenge we might have there is if you go back to the language in the long-term plan, we said we would convene a workshop to develop how we would collect this at Part 2. So that was certainly our intent. I mean, this workshop, if we hear creative, interesting other ideas for how to collect this, we certainly want to hear those and see if we can we could then consider whether we could find a way to do that within the confines of what we had said in the long-term plan.
Okay, yeah, that's helpful. I'm just thinking Part 2 is already a long process, but okay, I'll take a look at that language.
Any other questions, comments? Go ahead.
Anthony, thank you for hosting the workshop today. As an approved vendor, we work with a number of stranded customers, and I can see this being a potential issue should that be required information that we don't have. So I think this is workable, but I would ask for there to be an intent for some sort of waiver or ability to circumvent the requirement in the case customer is stranded. Alternatively, potentially looking at a percentage of the approved vendors projects, including this information, maybe even a high bar, like 90%, could allow for cases where the information is difficult or impossible to receive, a way forward for that customer. But yeah, thanks.
Yeah, I think that those are really interesting suggestions. I mean, we're having to balance the desire to have high quality data, and unfortunately, one way to make sure you get data is to make it a requirement. But I think, as you rightfully point out, there are going to be circumstances where, through no fault of your own, that data is just not available. So we have to have some sort of rationality in terms of how to accommodate those. So those are two interesting suggestions of how to do it. I mean, one thought just off the top of my head on a percentage sampling is, you know, I assume approved vendors would rather report their higher cost projects, so making sure that we have an accurate sample. But certainly, if you want to, you know, if you're submitting written comments, you want to flesh out either of those ideas, I think we certainly would take them under consideration.
Thank you.
I see, Amy, you had your hand up.
Yep, I did, and I just lowered it a little too earlier. Thanks, Anthony. I just some clarification on this slide. You talk about soliciting aggregated data for this phase 1, and is your anticipation for phase 2 going to data fields on every part 2 application, regardless of the type of project, regardless of the block type, the type of project? You just volume one, you can see where my head might be going just on the practicality of that. But just curious what you're thinking, and I just want to make sure I'm understanding aggregation to start, aggregated data to start, but then individual starting in June 2020.
Our thought process had been to do aggregated now because you probably don't have this store. I mean, you have it somewhere in your records, but you would have to create it probably project by project, which would be a big undertaking. So that's why it would be aggregated at this point, to give us these broad brush impressions of cost, but that by giving you until the fall of 2025 before this would be required, that you could build into your business processes collecting the data as you go, so that it would be available at the Part 2 form. But part of our goal of this workshop is to hear ideas about what can we do to streamline this and make you know, there will be new burden created here, because I mean, we're trying to collect cost data, it has to come from somewhere, but how do we appropriately balance that with the need for the data with the impact on vendors?
Yeah, appreciate that. Thank you.
So I think we heard a few ideas thrown out. If you have other ones you want to propose today or in the written comments, definitely want to hear those. Okay, I've seen Bill Jennings, you've been off mute for a while, but haven't put up your hand. Were you wanting to ask a question?
No, it was answered.
Okay, great. I see Kevin Sauter has his hand up.
Thanks again for being willing to reach out and listen and be proactive about this stuff. I think the concern from an installer's perspective that focuses a large portion of our work on residential is just the practicality of trying to gather all of that cost information per project in the kind of, in that CREST, the categories according to the CREST formula seem to be more applicable for a larger project, that might be community solar or something like that. But I know at least in our organization, I don't want to speak for other companies, but at least in our organization and in the organizations that I'm more familiar with for small residential installers, we are not going to have access to that kind of data without building a completely new accounting structure to accommodate that for the IPA. So I think the big question here is, I know the agency has a desire to really to get better data, and that's respectable. I think the concern is the burden on the installers is exorbitant, and it doesn't seem that the agency has an appreciation for what they're truly asking in the practical side for what that's going to create on our end as far as man hours, time, new processes, new accounting, requirements that are just not present for most small residential solar install companies that are like us, at least. So I do think there's a significant reaction, at least on our part, against this proposal, because it feels like it's going to be a very costly endeavor for us for something that has, it doesn't feel like it's the right cost benefit, maybe, if I could say it that way, Anthony, to get the benefit that the agency's seeking. It feels like there'd be a better way than a Part 2 requirement for every project. So I wish I had a better solution, but I'm willing to listen. I'm willing to think creatively. I'm glad to be part of the discussion for sure. But I just want to somehow express the reaction that us and our colleagues are feeling when we first got this proposal.
No, I hear you, and I'm sort of thinking about the ideas of sampling. I mean, the incremental cost of this data collection for residential project will be very different than for a large DG project or a community solar project. So
Right.
the extent to which maybe we could have a bifurcated approach to address that concern, it's something we certainly could take under consideration.
Yeah, and I think even like a sample, the sampling of the projects, like, so many percentage of your projects, you have to provide a sample cost structure. That's very different than a Part 2 application requirement for every single project. So I just, I'd love to hear the collective wisdom of everybody on this call, but I just wanted to at least be transparent enough to say, with all due respect, this is going to be a very costly and a very burdensome requirement that I just want to make sure the agency fully hears us say that from a small residential installer perspective.
Heard loud and clear.
Thank you.
Okay, see, Michael Daly, you have your hand raised.
Yes, thank you very much. As you noted, obviously, a lot of this data would be considered having sort of privacy impacts and also sensitive competitive information. I was curious kind of to what extent you've thought through or could comment on the kind of information handling protocols, and specifically, would this technically be public record or available via Freedom of Information Act requests, and kind of what just kind of from a privacy standpoint, what that might mean?
Sure. Well, we already collect data in applications that are confidential. So we regularly are handling through the program portal requests for treatment of confidential data. And there are provisions within the Freedom of Information Act in Illinois for commercially sensitive data. So this is not inconsistent with a lot of other data that we already are collecting.
Thank you.
Any other questions or concerns at this point? We're gonna shift a lot to some much more granular technical items. This is sort of the big picture. And I suppose some of this, what we're gonna get into next, may be informed in part by some decisions we made as we get more technical. Kevin, I see your hand again, up again.
Yeah, and I want to build on the last comment about data collection. One thing that's in the document, in the PDF that you guys put out, talks about how you'd be able to redact information or mark it confidential. I think it should be like, that should be the default, right? Like we shouldn't have to mark it confidential, because like you don't want people to essentially like make a mistake and not check the box, right? And then their data could become available through a FOIA or whatever. Like that should be the default setting, that the data will be held confidential.
That is something we'd have to talk further with our lawyers about in terms of how sort of confidentiality provisions in Illinois law work, and whether you can have that sort of blanket request. I feel like this has come up in other contexts before, and there were some challenges to it, but I'm not sure if I can you know, I'm not a lawyer, and also this was several years ago, so my memory is not what it should be. But that's I hear your point, and that again is something that we can take under consideration, how to facilitate that.
Cool, thank you.
Okay, Matt.
Hey, Anthony. Thanks for putting on the session. One thing I was thinking about, and this sort of goes to comments around, you know, different blocks, and understanding the goal of seeking, you know, accurate inputs to the pricing model while, you know, making those location-based and Illinois specific seems pretty important. I think like the time component is something to think about as well. So if like, depending on when you're collecting the data, and especially for, you know, some of the bigger types of projects or community solar, for instance, some of those inputs, if you're collecting at part 2, might be inputs from, you know, further back in time. And so like that sort of like time-based component is something else to maybe take into consideration.
Yeah, that is one of the reasons I guess is maybe slightly different. For the initial data collection, we were limiting it to data from last year. One thing we've done in the past with NREL data, I mean, I believe there was one year we had some issues in terms of the timing of when they updated their report, is we put in an inflation adjustment to account for that very point. But that, you know, well, I guess we do collect in part 2. I mean, we know the interconnection data for project. So if we're seeing significant, you know, we could certainly analyze, you know, if there's cost data for a project that was interconnected a year earlier, but only for whatever reason the approved vendor took a long time to submit the program. There's certainly something we could take into account in looking at that cost data in that manner.
Thanks.
So my next question is, no, this is, sorry, go ahead. This to shift from sort of, you know, big picture to a very technical question. One observation we've had is that the CREST model has all costs expressed in per watt DC, while because of the way the Illinois law is written, we've always viewed project sizes and project components in the AC size of projects. So this is sort of going to some of the feedback we've already heard about concerns for vendors submitting data to us. Does anyone have any strong feelings about the collection of data in a per watt DC or per watt AC basis? What we've done to date when we've had per watt AC data is we've looked at the program data of applications to come up with average DC AC ratios and use those as conversion factors. So we certainly can do that, but it could also then save us a step if we had all the costs being collected in DC sizes. I know this is pretty in the weeds, but Dustin, go ahead.
I mean, I would say DC, since most of our cost analysis, like on the sales side, is already going to be calculated based on DC. Might make it easier for you to get your required information.
Okay, thanks. Anyone else have thoughts?
I agree.
I agree with DC.
Okay, so what I'm hearing so far is, in your world, you're thinking in DC size. Is that sort of almost, it's kind of what I'm hearing. Is that a fair statement?
Correct. Yep.
Okay, so we can at least minimize some of the reduce slightly some of the reporting burden if we talk in a DC language, basically. So that's great. That actually it's not a major step for us to convert DC AC size base numbers to DC size, but it will save us a step in modeling. So if that works for everybody, then I think we would likely go that way. And again, if in thinking about this, or if there's certain costs that just lend themselves to AC sizes and we have to report those differently, that's something maybe you could come back in written comments. Moving along, so this gets to a question I think it was Kevin was bringing up. So what I have here on the left-hand side, these are those 4 key categories that are in the CREST model: generation equipment, balance of plant, interconnection, and development costs and fees. And a description from the CREST model, what they consider goes into each of those buckets. The NREL data we've been using to date is what's in the table to the right, where it is more granular. So one of the things I'm interested in is the advantages or disadvantages of collecting more granular versus less granular data. And it may well be that actually it's easier to report more granular data because you may already have something in this, already in this format. You may have an invoice for the modules for a system. You already have that. It's easy to report. So this is one of those things where I see advantages and disadvantages of both approaches, or maybe some sort of hybrid. I really want to open up the floor for people's thoughts and input here. I'm not seeing anyone's hand raised. So go ahead.
Oh, Anthony, I should raise my hand. Apologies. My only comment here is building off of what Kevin mentioned earlier about sort of the difference in sort of how the smaller residential or small commercial sector works, is that a number of these categories just are different for those categories. So I think it just reinforces sort of a different approach maybe to try to getting at what we're trying to, or what you're trying to get at. There's just some things just don't apply between different types of developments.
Are there any particular ones that give you more consternation than others, out of curiosity?
Oh, I don't know if it's consternation, but I think just the difference in interconnection, right? Interconnection costs. I think then when you look at what the development costs are, just look different for how you think about a sales and install process and relationship process with a homeowner versus community solar. Like I can't even speak towards to that at all. I just would imagine they're dramatically different.
Yeah, I think that's a great example. I mean, we have to put a number in for interconnection because the CREST model needs it, but presumably in almost all residential cases, de minimis amount. While community solar developers, obviously, that's perhaps one of their most critical numbers. Any thoughts on if we were to take different approaches depending on different sizes? What is a small, and we already have the distinction between small and large DG, 25 kW AC size. Is that as good a break point as any, or is the nature of market suggests going somewhere higher than that?
So I think a couple things on that point to kind of build on what Amy and Kevin Souter had said, like, and let me also caveat this by like, I haven't had like a real deep scrub with like our accounting team, but like some of these concepts like balance of plant, even though there's a definition that's described on the left side there, like that's not necessarily maybe how our accounting department would look at things, right? And so we'd have to kind of reshape a square peg to a rounder hole or whatever, and the way that Sunvest does it might not be the way that New Leaf does it, right? It might not be the way that Nexamp does it, and so like again, I think there's consistency things to think through here and talk through with our various accounting teams, and make sure that if we were to try to report this data, like there's got to be ways to get consistency in it, because yeah, like the way we look at things might be different than other companies. And then the other thing I would say to your question about where to break things down, I mean, the cost, and we talked about this during the development of the long-term plan. For instance, the cost of a rooftop system is very different than the cost of a ground mount system. ComEd's different than Ameren. Counties vary by county because of the prevailing wage law. You know, pollinator projects are different than non. Brownfields, landfills. So it's like there's different cost inputs that go into all these projects. And so, you know, if your goal is just to get like a ballpark for that's fine, but like it doesn't necessarily reflect specifically like the difference in a rooftop project, rooftop community solar, for instance, than ground mount community solar. So like I think there's a lot of different things to think about, and probably the industry through JSP and other venues will try to provide that information. But I think it's something that needs to be thought through, and we'd love to kind of work with the agency on how to think this through so that it's, you know, very much apples to apples.
Yeah, and I think you raised a couple good points. One thing I wanted to quickly mention is that in the CREST model, these 4 categories on the left actually all just end up getting summed up to a total. So while there's places to put in numbers for these, it doesn't actually, you know, if you were to accidentally flip your balance of plant and interconnection numbers, the results spit out by the CREST model would not change. So I think one way to think about these also is the goal is to make sure that we're getting in all of the costs. That may be as important at the end of the day as which bucket exactly they go into. But the importance of the buckets are, as we look at data, making sure we understand it. Inevitably, someone is going to, you know, enter something in a cost per kilowatt versus a cost per watt, and you know we need to be able to, you know, be able to spot that because things, you know, some data that just outliers from all the other data. So that's kind of where there's importance of the bucket. To your second point about sort of the differences between types of projects and regions, that's the sort of thing that I think the time and place to revisit that would be through the next long-term plan, which I know we only published one this spring, but come next spring, we're going to be starting the process of developing the 2026 long-term plan. If there are concerns about, you know, our group A versus group B not being granular or not for things like that, those are the opportunities of the time and place for revisiting those from what we've learned going forward. Kevin Souter, I see you have your hand up again.
Yeah, thanks, Anthony. I just want to underscore the importance of what is being said here, both with your comments there and then with Kevin's nuances that he raised earlier, because I do think we just need to keep in mind what is the goal we're trying to accomplish for the agency. And if the goal is truly to, you know, have accurate cost data so that we can, you know, inform the REC pricing model, I think we have to keep making sure that we're not setting this up based on what would be information that's nice to have, but what information accomplishes that goal? What information do we need to be able to accomplish the goal? Because I do believe consistency is going to be very, very challenging to get. The more granular the inputs, the harder it will be to get consistency across multiple companies and multiple, you know, project types. And so I would suggest or recommend keep it simple, Souter, right? like just really the simpler the better, just because I think that can really be helpful for if all we're trying to do is get accurate cost.
Mm-hmm.
If that's really all we're trying to do, then I would urge the agency to resist the temptation to try to create a huge administrative burden on your you know, approved vendors and designees that probably my guess, at least from our perspective, do not have the accounting abilities currently to provide this kind of information without retooling our whole systems. And so it's just a lot of, but if you say, hey, what's your total cost for this project? We can give you a number, but as soon as you tell us to break that cost down into any level of granularity, it's going to be very challenging, and you're just going to run into consistency issues. So I don't know if that's really needed based on what I'm understanding the goal to be, which is just an accurate cost number by project. for proper rec price modeling. Does that make sense?
Yeah, I mean, I suppose the counter argument would be that the value of more granular data would be that if we are seeing significant variation between vendors and trying to understand what is contributing to it, being able to see the components helps isolate that.
Yeah, and that's and
But this is the balancing act that we have to do.
it is that balancing act, right? And it's just that, you know, I mean, I used to be an accountant before I was in this industry, right? And as a CPA, we'd go and do audits. And so the whole purpose of doing an audit was to do a representative sampling of whatever company's, you know, financial situations so that we could verify their reports as being accurate. But by far, we never went as an accounting with PricewaterhouseCoopers and actually sat down and looked at every transaction or required that every transaction be sent to us. And so I just think there's the concern, the biggest concern I'm trying to raise today is just like when you put it in part 2, you're looking at every transaction at a very granular level, which is not practical. It's nice from a reporting perspective, but I really think it's not feasible and not practical, especially when you get the smaller the project, the less practical it is to require every project have that same level of granularity.
Great. Bill, I've seen you've been off mute for a little bit. Did you have another comment? And then I see Dustin's hand up. Bill Jennings.
No.
Yeah.
No, I'm listening.
Okay, great. Dustin, I see you have your hand up.
Yeah, I just wanted to piggyback off of Kevin's discussion that our company that I'm with also works heavily within the residential sector. And yeah, keeping it more generalized, like most of the time we're just looking at material cost, panels and inverters, you know, labor costs, and then kind of just admin soft costs. And it's really just broken down into those 3 sections, with interconnection being kind of a cookie cutter price we're already accounting for on most projects.
Yeah, I could imagine for residential that ultimately we may just use a very generic number, which I believe is what we're doing right now. Interconnection becomes really a significant number as we enter larger projects. Okay, any other questions or comments, or can I move on to our next? Okay, so this gets into the weeds, and what I want to do here is I don't want to talk specifically about these numbers. But these are additional inputs that we use into the TREST model. Many of these were based upon stakeholder feedback we got when we developed the first rec pricing model back in 2017 and 2018. And so they're stale. Some of the newer ones, some of the other ones like property tax and land lease costs, I think we did get some updated stakeholder feedback last year. So we're interested in how to best sort of revisit these and see if they need refreshing, or perhaps even additional granularity between different size categories. And so what we're proposing right now is these really, I think, don't lend themselves to project by project data. Well, maybe the property taxes or land lease, but things like overall expectations about IRRs, that's not something I could be wrong, but I'm pretty sure that's not something you're looking at residential project by residential project. So our proposal is to survey vendors as part of the survey we would do in January about these assumptions and whether or not they should be updated, and then do that sort of going forward once a year through a survey model rather than through a part 2 collection. So wanted to get feedback on these sort of financial assumptions rather than project specific cost assumptions, and how do we as an agency gather better information on what to use in our modeling. in general, does the idea of doing this at a survey basis make sense? Oops, I'm not sure what I just did there.
Got the Chicago River running through there, Anthony. Good job.
I think I just turned on a feature I didn't know about. Dustin?
I mean, finding the project management costs would be pretty difficult because it can vary drastically from one project to the next, just depending on what's required from the project manager. And then, I mean, just interest rates, as we know, those vary very, very quickly. So that would also be just an ever-changing dynamic that we'd have to keep track of. But could be done. Yeah, I mean, interest rates, can also vary depending on the type of loan product that the project's being financed with. So, whether they're buying down the points with the dealer fee or not. So I'm just seeing that.
Yeah, I think it ultimately comes down to sort of seeing like what's the typical, efficient industry practice on some of these assumptions. And this is certainly one, I mean, where, if you want to think about this more, any nuances here, the written comments would be a great opportunity to come back to these as well. Oops, there, I have one more slide. No, I guess that was it. So those are the sort of the specific topics that we were seeking feedback on. But at this point, I definitely heard a lot of messages very strongly, but I want to open up the floor if other people have other questions, comments, or concerns about this process and next steps. Okay, Michael Daly.
Yeah, thank you very much. So just is your, I guess, presumption generally that this would probably increase rec prices due to an increase in admin and overhead cost in order to account for this new program requirement?
We have not yet made any assumptions about that.
Okay, thank you. Yeah, that seems like probably a likely outcome, especially for companies that don't have the back office in place already.
Great, Dustin?
Yeah, so the aggregate information that you're looking to gather would be starting around the start of 2025, and you're expecting by the end of 2025 to transition to like individual data per project. Was that correct?
I mean, that was the proposal we released, obviously based on the feedback we're getting today. We're going to probably have to, give that some additional thought. But the model we had, we proposed was collect aggregate survey data in January, phase in the part 2 collection process late 2025. But I suspect we'll be looking at some ways to tweak that based on the feedback we've heard today.
Okay, thank you.
Kevin?
Yeah, so I'm going back to your last slide that you showed. I'm trying to think through like the one with the ARR, the IRR and debt and all that. Yeah, there you go. I'm trying to think through how you guys would you collect this data? Like you say that you want to collect the data through the long-term plan process, but I wonder if there's challenges there because most of the players in the long-term plan process are trades, and we can't gather this kind of data through the trades, or we can, it's just very difficult because of antitrust issues. So I guess I'd encourage the agency to think through like how you could collect this data directly from approved vendors in like a confidential way.
Yeah, I mean, I think image I think we described as maybe better in the feedback, or maybe we didn't, which is why you're asking the question, would be that we'd be surveying vendors for their thoughts on these numbers and using that as we update the long-term plan. Yeah, because you're right. There are many entities who are not directly participating in the Commerce Commission proceeding to approve our long-term
Right.
plan.
Yeah, anyway, just something for us all to think through.
Yeah, no, that's a good point. We can clarify that. Any additional questions or comments? Great. Well, I appreciate everyone taking the time to participate today. Already got some really good feedback. Sometimes when we do online workshops like this, people are a little hesitant to chime in. So I really appreciate people not holding back today. This is exactly what I was hoping for we would get today. I do strongly encourage you to submit written comments as well. Those are also really helpful. It also gives you opportunity to maybe sharpen the point of the points you're making, give specific examples, etc. So the deadline for those comments is November 22nd. You can email them to our email address, ipa.solar@illinois.gov. And as I mentioned previously, these slides and recording of today's workshop will be available on the IPA's website in a day or two. So with that, thank you, everyone. And again, appreciate your participation today and looking forward to seeing it written comment as well. So thank you. And that's the end of the workshop.